Hello everyone, it's Friday, April 3, and today we will review the charts for the euro and the pound to identify potential market trends. Yesterday, the euro showed a slightly recovery against the US dollar. However, market participants and analysts seem to find confusion regarding US President Donald Trump's statement about the imminent end of the war with Iran, which he contrasted with plans to intensify military offensives in the coming 2 to 3 weeks. This suggests that a ground military operation is being prepared, with many experts expecting it to begin within the next 6-7 days. Trump has asserted that this operation will be short-lived and successful, ultimately leading Iran to surrender, allowing him to declare a US victory. However, this scenario appears unlikely as Iran continues its active attacks against Israel and infrastructure in the UAE linked to major US corporations, including assaults on data centers. This development suggests the continued escalation of the conflict that is not expected to resolve soon. Meanwhile, oil prices have surged to record highs, with WTI crude reaching 113 USD per barrel and Brent crude surpassing 140 USD, levels not seen since the financial crisis of 2008. The situation in the Strait of Hormuz has improved slightly as Iran and Oman are drafting a joint peacetime protocol to monitor and coordinate maritime traffic in the strait. However, full access through these roads is not yet assured. The United Nations has warned of a broader war if the US and Iran do not resolve their conflict, and a meeting of the UN Security Council is scheduled for today to discuss this situation. Please note that today is a public holiday in many regions, including the euro area and the United States. Market volatility is likely to be subdued, with few major moves expected. However, Friday's macroeconomic calendar includes important US jobs data. Non-farm payrolls are estimated to have increased by 65,000 in March, following a decline of 92,000 in February. The unemployment rate is expected to remain stable at 4.4%, while average hourly earnings are forecast to rise by 3.8% year-on-year. Additionally, services and composite PMI figures for March will be released today. While the calendar is busy, traders have lately overlooked jobs market statistics. The ADP National Employment Report published on Wednesday went unnoticed, and yesterday's data showing a slowdown in initial jobless claims growth did not elicit a strong response. Living dollar buys inactive. This suggests that geopolitical tensions are taking precedence. Therefore, today's NFP report may have little impact on market sentiment, especially as many are observing Good Friday. Now let's move on to technical analysis. The 1-hour EUR USD chart indicates that a false breakout at 15.16 would trigger a buy signal, potentially pushing the euro up to 15.57. At this level, it is likely that sellers will step in, pulling the price back down to 15.16. This trading range is expected to be the primary focus today. If the price breaks out of this range, short entries could be considered at 1.1593 and 16.28 on a rebound, targeting a move of 25-30 pips. Conversely, long positions may be relevant at 14.84 and 14.48 on a rebound, also aiming for a 25-30 pip fluctuation. Regarding the British pound, the market situation is similar. Although sterling managed to regain some of its earlier losses triggered by Trump's statements, downward pressure remains. Bears are expected to become active around 32.48. A false breakout at this level would generate a sell signal, targeting 32.13. A break and hold below this market pushed the pound down to 31.82 and potentially open the path toward 31.62 last month's low. At this level, I would recommend considering long positions on rebound, anticipating an intraday correction of 25-30 pips. Long entries at 32.13 and 31.82 should only be placed following a false breakout. If selling activity is muted, short positions could be prudent at 32.82 on a rebound targeting a move of 25-30 pips, or at 1.3317, depending on US non-farm payrolls data. If actual figures disappoint traders, the US dollar could weaken, potentially allowing the British pound as well as the euro to gain strong upside momentum by the end of the week. Good luck to everyone. Have a great weekend.